Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India. And yes, we are here once again after a long time understanding, decoding the effects, both from the macro perspective, both in terms of domestic as well as the global factors. So first, if we talk about the domestic side, the FPI flows for the year 2025 has been negative. So the total flows for the 2025 has been to the tune of negative $8.1 billion. If you break down into equities, negative $16.1 billion roughly has been the outflows. And if we talk about debt, we have seen positive flows of around $8 billion in 2025. Well, if we also talk about the trade deficit numbers, they have been on the right side to $41.7 billion, with exports rising almost, or I would say the imports rising almost 16.6% year on year basis, while exports have dipped by around 12% year on year. So, which is obviously causing the trade deficit number to go higher, which remains a cause of concern. But there have been positives also. The inflationary trajectory has been really good for us. The CPI data is at 0.25% thanks to the downward trend into the food inflation. But yes, I think this food inflation may bottom down and slightly start rising because of the base effect and the supply side constraint also. If we talk about the FX reserve, they have been standing at around $692.5 billion, which is a decent enough 9 month import cover, which again gives us a lot of cushion for the Reserve Bank in case if there is any kind of sharp intervention required. While if we talk on the global side, we have been seeing data points from the US. After the US government shutdown, the releases have been not that great. It has been disappointing. If we talk about the US retail sales, not that great. If we talk about the US PPI data, that was again not in sync. Also, if we talk about the labor data, they have been also seen softening. So all in all, these data points have been figuring that there is a possibility and a very high possibility of a rate cut by Fed in the December meeting. While it was earlier, if we talk about a week earlier, I think the probability was merely only 30%. But because of the data points and also because of the Fed speakers, particularly Christopher Waller, has been of the opinion of being very dovish, and couple of more members slowly added to the tune, where the increase in the probability of the rate cut has gone very, very high. So that is one. Secondly, even if we talk about the RBI policy, which is due on 3rd to 5th of December, considering the CPI data and also the Fed trajectory being more dovish, there can be a possibility of a rate cut from RBI as well of a quarter basis point, which needs to be kept in mind. If we talk about the Eurozone and the dollar JPY and GBP side, I think Eurozone and GBP side, they have been still struggling with their own internal dynamics. But if we talk about dollar JPY pair, they have been their own play with respect to the carry. Because if we see how the 10-year yields have moved in the Japanese yen or the Japanese currency pair have also moved in synchronization with the movement of yields going higher. So 10-year has gone to 1.82%, while the dollar JPY pair also went towards 158 levels. So I think if there is a rate cut by Fed, and plus in case in the policy of Japan, which is on 18-19th of December, if there is a rate hike where there is some probability in the market is thinking that there can be a possibility of rate hike, then this carry unwinding can happen more sharper, which can definitely impact the riskier assets, including equities, cryptos, and so on. So I think there can be one leg of sell-off which can be seen in case both of them happen, the rate hike by Japan and the rate cut by Fed. So it's an important parameter to watch out. What's happened with dollar rupee? Yes, there has been a case where 88, 81 had been protected since a long time. We did see a break of it when a single day moving towards 89 half. NDF even moving as high as 89, 69, 70 levels. But now I think a consolidation phase has come back to the phase where 88.80 now acts as support, while 89.40.50 zone acts as a immediate resistance at this point in time. Overall, we have seen the band increase by around 1.5 rupee at every interim. So, like if we talk about the year 2025, almost from 85.70 to 87 band, it moved towards 87 to 88.80 band, and now we are eyeing a new range for the remaining period as 88 half to 89.80. So that's the broader range for dollar rupee. That is what we expect. So that's all from our side, friends. Thank you so much. I hope you find our video insightful. Thank you.